and if you got questions, please just holler at me. All right, so in the broader piece of the market, right, we've got some fundamental things happening that I think are really bullish longer term, and then we're going to look at the charts, and you're going to see that that's definitely being reflected. And I guess overall, the conclusion is looks like we're getting ready to set a new wave higher. For the last several weeks, we've been hoping that we could get it kind of trade sideways to choppy through the holidays, and then in January develop a little bit more of an opinion or start a new directional move. I think that is just, that tide is turning because the demand is just so strong, and now we're starting to see South America turn dry again. So here are March soybeans. The January contract still has a little life in it yet, but I went ahead and switched over to March just so we can get a clear idea of what we're looking at. And as you can see, we've jumped higher from the report day. This bar right here is our report day. The USDA didn't quite lower the carryout as much as some of the traders wanted, so they sold it off. That low never got violated, and so that turns out to be really bullish yesterday when we took out the high from the report day. So whenever that happens, you sell off, then you can't get any follow through, and then you turn around and take the high back out. That's a really bullish signal, and points that this corrective move down is probably over. So now we're challenging this high. But I want to back the time frame out to put it in perspective of what we're doing, because I think it's really significant. So I'm going to start by pulling out into the weekly chart. Let me get this. There we go. All right, so here's our weekly chart. I'm going to try to adjust this a little bit so we can see it clearly. Here's what we've been doing from the August, from April, right? The August low is right in here. And as we've just moved up, we've moved up extremely rapidly, very impulsively, and resistance really hasn't held, right? So we've talked about this level for weeks being resistance here at the 1055 level. And we've been looking at this move and trying to call it very similar to the 2016 move, which is back here, okay? This is the 2016 move that ended in June. Now, what's interesting is that this move didn't start until February. So we're much earlier in this move. 1208 was the peak of this 2016 move. And obviously, same thing as the daily chart, right? We have a little hook reversal. We've got no follow through the downside on the weekly chart. And now we're challenging the top side. If this $12 level breaks, I would expect us to immediately test this 1208 level. And if that breaks, it's really significant. Let me back this up into a monthly chart. So on your monthly chart of soybeans, here's that 2016 high of 1208, and here's where we're at. We're knocking right on the door. Now I'm going to put a line right here at 1280 because this is your next level of resistance. Now, above 1208 and above 1280, there is nothing in the form of resistance until 1550 or even $16 on soybeans. Now, this is a very long-term chart. I'm not saying it goes straight there. I'm not saying it does any of that. But it is a possibility here that if our balance sheet continues to get tight, and if South America does get into trouble and we have yield, that soybeans need to come buy acres here in the U.S. And $12 doesn't seem to be rationing demand. It also doesn't seem to be attractive enough to start buying acres. So we may need to move to the next price level higher, which is going to be up into this range. So if you're looking to re-own beans, this might be your chance to do it, because we may not take a break here. I know a lot of analysts are looking at this high as the high, and they're just kind of in disbelief that we're going too far too fast. That is not what these technicals are telling us. So if we go all the way back to the daily charts, we're looking at very strong impulsive action here. We've had no weakness. We have no divergences on this chart. Everything about it is pointing higher. If we put our cloud on top of it, we have the same setup. Your leading edge is pointing higher. Your MACD is ticking higher. We're well above where we were 26 days ago. So everything about this chart is all systems go in green, and we take this high out. I think we're going to push. I wouldn't be surprised if we went straight to 1250 just to go test that longer term resistance that I just showed you on the monthly chart. And if we can get up there and close above it, then I think the sky is the limit. All right. So to put it mildly, yes, we're bullish beans. If you want to re-own them, I think now's a great time. If you still have them, I just hold them because there's nothing on here to say to sell it. All right, so what is corn showing us? Corn really hasn't performed like beans yet. And the reason for that is that corn hasn't gotten tight yet, right? We still have a lot of it. We still have a lot of world demand, or we still have a lot of world supply, and demand has been strong, but it really hasn't taken anything out. Now, I think that is changing very rapidly. I want to show you this on the shorter term chart, because this little formation just turned really bullish with this move here this morning above 28.5. So, but let's be basic first, right? Our oscillators are turning higher. They've been into a buy zone because they're below the zero line. Our leading edge is ticking higher. Our fast line is above our slow line, and we are starting to break out into new highs. So everything about this chart is starting to look even more bullish. Now, I'm gonna back this out and show you a 4-hour chart. And I'm sorry if this is a little bit too granular for you guys. Stick with me here for just a minute, okay? So this is a channel coming from the peak at 439 in March to the peak earlier this week at 428.5. As this channel got drawn, you can move it back and you can see this tied back to the low here, okay? So you have a downward channel coming from the high. But then you also have, if you draw a trend line from this peak to this peak and then mirror it up here, now you have an upward slanting channel as well. So now you're kind of in a situation where the first to break wins. Well, this channel broke yesterday and continues, or I'm sorry, this is in the overnight. This channel broke in the overnight and it's continuing to push higher. If it breaks both of these channels, then this high is in jeopardy and corn could be starting its a new leg higher as well. And this makes perfect sense if you're thinking of beans breaking this $12 level and working higher too. Corn really can't let it do that because corn's in a situation where it doesn't know how many acres it needs to buy. You know, can it give some acres up to beans, or does it need to kind of hold serve? And if the demand gets bigger, or this year's crop shrinks, there's a chance that corn might actually need to buy acres. So then that sets us up for the JFM timeframe, which could get into a crazy acre war between the two major grains that compete for acres in the I states. So I think this is a really bullish short-term chart on corn, and if it can break this 429 level today, then we're definitely looking up. Again, with corn, last week we said we thought we were gonna trade sideways to lower through the holidays. I don't know that that's going to hold true based on this action here overnight. So only time will tell. All right, back to our longer term chart here. I'm gonna take this out to the weekly chart as well so we can take a look at it. Again, no weakness on this chart whatsoever. We really haven't even tested the 2019 high yet on the weekly chart. So there's no reason to think that we won't. it just hasn't done it yet. So a lot of times, remember, consolidation favors continuation. And we've been seeing that for the last several weeks in corn. So it could just be pausing here before it starts to work higher. So I wouldn't take any action on sales. If you're gonna sell some to get cash flow, I'd go ahead and re-own it. Wouldn't hesitate for a second to do that. Otherwise, I just sit tight and let the market work and do its thing. I think the thought process that, oh, this is going to be a short peak like this one, I just don't think that is logical in December and January, because where's the supply going to come from that's going to cause that to happen? We haven't even planted next year's crop yet, and the new crop contract really hasn't even started to move higher. Here's your December 21 contract. This chart, I mean, we're at 413. We really haven't even begun a move up in this contract. So I don't. In order to break, we have to have a break in demand or an increase in supply, and just where's that going to come from short of a shutdown? But that shutdown possibility's been in the market for months. We've already lived through one, and we know we didn't kill ethanol. So I think the fear that a shutdown is going to be overwhelmingly bearish to prices is just not real logical at this point. I think that's a losing argument. Now let's take a look at wheat, because I think this is the tiebreaker if you're worried about things going down. Look at what's happened in the wheat complex this week. Russia is fighting food inflation, so they're limiting exports, and there's a lot of debate if you read the chatter about, is that bullish or bearish? And I think the overall conclusion is that short term it may be a little bit bearish, because Russia is going to try to dump as much onto the market as it can. Longer term, it's probably bullish, because why would you limit your exports? It's because either your demand is so strong you have to have it because you're fighting inflation, or because your crop is in danger. In here, we might have both a weather issue both in the U.S. and in Russia, and we definitely have food inflation concerns kind of coming all over the globe. So just pay attention to what wheat has done. It's gained on corn. Kansas City's gained on Chicago. All of those spreads are firm, and I think wheat is telling a story that we're moving higher. We've been talking about it for a couple of months, that wheat is in the lead on as far as the maturity of this move. Definitely Friday, it looked like it was just going to break out to new highs. Monday came in and took it all back. I'm still bullish wheat and think that these highs above 587 are likely to break, and that we're going to move on higher, especially as the dollar continues to break. Let me check what the dollar's doing here this morning. Just a second, I got to pull it up over here. All right, yeah, the dollar's breaking out to new lows here this morning, and looking like it's going to break the 90 level potentially. So we see the dollar break down into that mid 80s, under 90. I just don't see what the major downside is in any of these grains, because that is just really bullish and supports that inflation case. I even think it's bullish oil, because if we come back in and we turn this economy back on, we turn the world back on, we get a vaccine, there's an awful lot of cash that's been printed and is sitting on the sidelines and is liquid. And the rule is don't fight the Fed, and the Fed is a bullish catalyst and a bullish animal. And so what are you going to do if you're a fund manager? You've got to ride that inflation wave, and you've got to buy commodities. And I think that's just kind of a blanket statement. And I think wheat is the first food staple that's going to get bought up. So we're clearly bullish, and until we get something major that changes the dynamic in corn and soybeans, we're going to stay that way. we're probably bullish all the way through July. And remember, it's king corn. It's not king wheat. It's not king soybeans. Once corn really gets going, then everything else changes in that dynamic. So stay tuned to corn breaking that 430 level in March, because that really could start a significant leg higher. And next week, we'll put some projections out as to where that could go, using a little bit of analysis. I'm not quite ready to go there yet, because I want to run some more numbers and some more simulations. So again, there is a lot of risk in this business. There's risk in trading futures and options. Please don't trade beyond the level that you're capable of trading. Certainly everything in here is my opinion, and we can definitely be wrong. But if you're looking for advice and you want to take a position, please call us. We are more than happy to engage in the discussion and help where we can. I hope you guys have a great week, and we'll talk to you soon.